Hi, are we back once again? Just wanted to follow up real quick on how Tesla played out. If you go back and watch the other video onto the thought process that I had going into it, that was just kind of a snippet, just using the gamma. Um, Not really looking at charts too much, but just kind of letting the gamma exposure and kind of the 360 view kind of just give us an idea of what the options market uh, essentially looks like from the inside. So what we're going to try to do is kind of look at what we were looking at last night in the last video. If you haven't seen that one, go back and watch it real quick, and we're going to kind of just run through some of the differences here. First one is the delta exposure. I talked about how I didn't understand too much about how the delta exposure was going to affect Tesla, the way it was looking. Here's the picture of it last night and how it looked, and then here's the picture of it this morning. This, from what I understand, is based entirely off open interest, so this doesn't change during the day because open interest doesn't get updated during the day. So this is what the picture looked like in the morning once open interest was updated. Here's what it was last night. So you can see the hedging that was going on the upside, the put hedging that was going on. A lot of it got cleaned up, overnight. Our essentially my estimation that Tesla was going to see some kind of squeeze in a way was correct, given that there was just so much gamma exposure to the downside, but they could not get the stock price below the volatility triggers. And we'll show you what I mean here. The volatility triggers were sitting at 655 this morning. So we'll go look at a chart here. Tesla sitting at 655 was the gamma trigger. Let's just take a look at where Tesla went. First thing, I'll get rid of everything else here. Tesla comes right down. Basically, here's 655 and 650. These were our two volatility triggers here. Let's get rid of these. We don't need these. Our two volatility triggers, so we open above them, we come down and we test them, and then it's rocket ships. Now, here's a little trick that I'll teach you right now with the way this works is with Tesla, what I was watching as this was coming down into, I was watching these 650s. These were going for 30 cents, $30 a piece. It dropped like 15 points off the bat. These didn't change. They stayed $30 no matter. It didn't matter what Tesla was doing. These prices didn't change at all. Okay, so that's the first thing I noticed. Then I noticed it stay here at 655 for just a bit. It was lagging the market a little bit, and I thought they're about to rip this thing. They're holding these premiums up. They know it's about to go up. So first thing I do is I go buy the 700s, and I'm just going to sit on these until I see some sign of weakness in the market, just something. And luckily, those ran like crazy. But the idea was that we were prepared because we had an idea that there was a squeeze going to occur. Now, the other thing I was looking at the other day, I think it's on my Twitter account here, was this Tesla skew, which had just changed like crazy. You can see the skew distribution here. This is the IV distribution. This is going to be the implied volatility of calls per expiry, calls and puts per expiry. So the IV had just rocketed right here. And a lot of times the market is going to place the stock, kind of fits it right into this little area. Now, I learned this from Hawk, who's in the Investors Haven Discord. He's the one that created the gamma exposure charts that I do videos about, that I'm such a fan of. And he basically gave me the idea that his experience was that the stock likes to move into this little crevice here inside this smile, this volatility smile. This is another thing that I've been learning about with skew. And so I saw this picture and I tweeted out, I said, I was just like, when I saw that, this was at noon yesterday. And I instantly went and bought calls. And that's why I did the video last night. This is why I was in calls, was because of this. Because when you see the skew flip like that, at the same time, you've got the market essentially net short in a way. All the market makers are delta hedged on the put side, and that's just the way I see it. So a squeeze is incoming, and this is like the definition of what a gamma squeeze would be like, I think, where they get squeezed out. So now we'll see what this picture looks like tomorrow, the net delta, and we'll see what the new gamma charts look like. Let me go see if we can pull one up here real quick. First thing I like to look at is the Tesla gamma, net gamma. So we'll pull that one up real quick and see what it looks like, and compare it to this one, because we want to. This was the one we ran yesterday, so we want to see what it looks like compared to this one and how the picture has changed. We saw a rocket to basically 700. It tagged 715, came back down, got 700. Now it's sitting in between these two levels. So let's see what it looks like now. You can see the change character. You can see a big difference here. Can't you see how one day has completely flipped the options market? Now here's the issue that I see. The issue I see is, well, the vol trigger is still 650. I want to check this first thing in the morning. As soon as the market opens, I want to know where this vol trigger is. Is it still 650? Because if it moves up, and it's going to be sitting right under where price is, right under where the close was, or something like that, I expect this thing to crater. And the reason I say that is because 36% of all this gamma is expiring tomorrow. The way I understand that is that it's going to mean that if the market makers, the dealers, let these calls expire in the money, they're going to get wrecked. So it's not in the dealer's interest to allow these calls to get paid out. And what happens is, as time moves forward, as IV drops, all the prices of everything is going to start getting that theta decay really hard, and these calls are just going to start becoming worthless. People are going to start selling them. The dealers are going to start rolling off their hedges, and what that's going to do is all that gamma that's expiring is going to force Tesla down. I don't see a lot of protection down here. And we just had one of them crazy moves from Tesla where it's literally not. I mean, this is a 10-minute Heikin-Ashi and not a single red candle, pretty much the entire day. I mean, well, okay, so that's till noon. All right, so all the way so it basically it did its whole move all the way till noon. So you had, many months worth of gains literally put into, a few hours. So in my opinion, there hasn't been a lot of time spent in these levels here on the upside. You can see where it just kind of retraced the crazy crater that it had off that FOMC pump. So in my opinion, if this thing can't get legs tomorrow, which it totally could, if it can't get legs tomorrow, you could definitely start seeing some downside, even to 675. Now, playing it for lottos, probably not going to work. You're probably going to want to, what I would do is check the skew out on Tesla during the day. See, here's a little trick that I learned, and I was doing this with Shopify today. Check the skew periodically throughout the day, and that's on this Greek page through Unusual Whales. I think this is free, so you don't actually have to have. But see, again, look where they pinned the price right there. But see how this gamma or this skew is like this because someone still has a whole bunch of puts that are expiring on 617. I might do a video on that. It's just crazy. Someone's buying 5s and 1 puts. So all those are going to expire on June 17. So that's something to keep in mind for that expiry coming up. I don't know how that's going to play out, if that's going to cause some kind of squeeze or not. It might not do anything, but we'll see how that vol skew gets shifted. But we are still leaning to the upside a little bit, but it's totally different than that other picture I showed you, right? Where you just see this crazy, almost like all of a sudden everybody just got super bullish on it. It's not like that anymore. But what I would do is look at the skew and try to find, what you'll see is try to find a spot inside the skew where you think price is going to go. So like I had a price target of 735 on Tesla because here's 735 right here. I didn't think this was going to pay out, but I thought this would draw it to it. You can see where we are in the skew curve. So pinning us right there by tomorrow would make a lot of sense, 735-ish or something like that. Okay, so I would only play it to the upside if we're sitting solidly above the volatility trigger, and the market's good. If the market's going to play balanced chop mode tomorrow, which is very, very likely at this point, probably not going to even touch Tesla, but it would be the only thing I play if to the upside or downside if the market does anything interesting. Okay, anyways, hopefully this kind of helps you some more into the thought process, and let me know if you like this in the comments, and follow me on Twitter, join those discords so you can use this stuff too, and we'll see you next time. Peace.